Hi and welcome to Axis Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends and market moving factors that set the tone for the day. Whether you are a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on Thursday, and we'll start with the global markets. Overnight, the broad market S&P 500 dipped 0.7%, while the Nasdaq fell 0.8% and the Dow dropped 0.6%. For the full year, the S&P 500 locked in a gain of 16.4%, which is its third straight double-digit annual growth. The Nasdaq Composite rode AI enthusiasm to a 20.4% yearly advance, while the Dow advanced 13% in 2025, hindered a bit by its lack of tech representation. Asia-Pacific markets fell on the holiday shortened and final trading day of the year. China's economy ended the year on a slightly less gloomy note as factory activity expanded in December for the first time since March. Moving on to the Indian markets, Nifty ended the final day of 2025 up 191 points, whereas Bank Nifty settled at 59,582 with a gain of 411 points. Nifty found support near Wednesday's high and bounced sharply, reclaiming the 20-day SMA and the 26,000 mark. However, the index faced resistance near 26,200, forming an upper shadow despite a strong bullish candle. For today, 26,200 is the key level. A sustained move above this level could open the door to a fresh all-time high. On the downside, 26,100 and 25,969 remain immediate supports. Momentum is improving, with the daily RSI giving a positive crossover while keeping the bias constructive. At the sector level, Nifty Consumer Durables led the gains with 1.56% rise, while Nifty IT was the sole loser of the day, ending 0.3% lower. Out of 12 sectoral indices, 11 closed in the green and only one closed in the red, indicating broad-based market strength. Amongst F&O stocks, Hindustan Petroleum was the best performer with a gain of 6.6%, while Vodafone Idea was the worst performer, declining 11.5%. The drop was led by Cabinet's AGR relief report, which approved a 5-year moratorium on the company's AGR dues of 87,695 crore. At the macro level, India's fiscal deficit widened to 9.77 trillion rupees during April to November of FY26. In the cash market, equity markets saw a sixth straight session of foreign selling, with FIIs offloading 3,597 crores. This pushed total monthly outflow to 22,719 crores. Despite continued FII pressure, domestic investors took control during thin holiday trading, lifting the markets and helping both indices firm up ahead of the new year. Nifty futures gained 177.5 points, while open interest rose 1.7% to 153.6 lakh shares, confirming a strong long build-up. Bank Nifty outperformed, rising 297.4 points, with open interest jumping 7.9%, pointing to aggressive positioning in banking stocks. Even as prices moved higher, speculative activity eased. Nifty and Bank Nifty premiums narrowed to 167 and 302 points. The Nifty put call ratio climbed to 1.27, supported by heavy put writing that reinforced downside protection amid call side profit booking. FIIs and proprietary traders turned bullish through stock futures accumulation, while retail participants stayed cautious and DIIs continued to hedge. India VIX fell to a calm 9.48, signaling a low volatility, even as the rupee remained weak at 89.87. Overall, the divergence between cash market outflows and strong derivatives positioning highlights a market driven by domestic strength, setting up for a low volatility start despite currency pressures. On commodities, gold slipped 0.5%, while silver dropped more than 6.5% to $71.3 per ounce on Wednesday. It retreated from Monday's record high of $86.62 as investors booked year-end profits. Despite the pullback, silver is expected to remain supported by strong retail and institutional demand, tight supply conditions, and expectations of further monetary easing by the US Federal Reserve in 2026. Technically, both gold and silver failed to break their previous highs and moved below Monday's lows, signaling emerging weakness. WTI crude oil eased 0.5% to $57.38 per barrel, even as US crude inventories, excluding the SPR, fell by 1.9 million barrels. This was crude's largest weekly draw since mid November and well above market expectations. That's it for today. Please note that this podcast serves solely for informational purposes and should not be considered as financial advice. For a comprehensive disclaimer, please visit our website. Thank you and see you tomorrow at the same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.